Today we'll review the changes in my P2P Lending portfolio last month. Stick around until the end to see how I increased my weighted average yield to over 11% per year. Before we start, you should know that this is not a perfect P2P Lending portfolio, nor is it the highest yielding one. It's part of a broader multi-asset portfolio that fits my risk profile at the moment. If you are thinking about investing in P2P loans, you can build your own portfolio based on your own risk tolerance. Note, however, that P2P lending is risky, and if you don't monitor the events surrounding the platforms that you invest in, you might lose your money, which is why this video is no investment advice. You can use our news feed to monitor events surrounding your P2P lending platforms, read our reviews to gauge platform risk, or utilize our lender risk and country risk data hubs for a deeper understanding of the risks associated with investing in specific lenders. If you are a serious investor, you should not only invest in P2P loans, but also build a multi-asset portfolio which may be more resilient in the long run. Alright, so this is how the portfolio looked at the beginning of September. In this column you can see the interest payments for August, followed by the changes in the past month. On Peerberry, I reinvested both my earnings and principal into real estate loans from SIP Group, which are based in Lithuania. These loans come with a 8.5% interest rate, and thanks to the 1% loyalty bonus, my effective return is 9.5%, a fixed rate for the entire 2-year loan term. I've also reduced my stake in the South African loans due to the recent decline in interest rates. Staying fully invested in short-term loans on Peerberry remains challenging due to limited loan availability compared to a higher investor demand. There's been no change on Estate Guru, meaning no progress in the recovery of defaulted loans in my portfolio. On Escredit, I rely on the diversified automated strategy, as manually cherry-picking loan originators based on financial data or interest rates adds little value. Since Money for Finance in Jordan exited the platform, the remaining options are mainly fintech startups with limited track records and little to no financial transparency. For investors, the key advantage of Escredit lies in its quick cash-out option, provided you stick with the automated strategies. On FinTown, I redeployed the earned interest into one of the offered development loans at a 13% annual yield. There's been no new activity in my portfolio on Krautbier or in Demo. On Lande, I've slightly increased my stake and the portfolio continues to perform in line with expectations. Currently, 80% of my loans are current, 15% are delayed and 5% are in default. The average annual rate stands at around 11%, which I consider reasonable given the nature of these loans. On Income Marketplace, the loan originator Ibankar repurchased one of my higher yielding loans. However, the lender is now offering new funding at a reduced rate of 9.5%, which I find less attractive. As a result, I've chosen not to redeploy the funds, leading to a temporary decrease in portfolio value on this platform. The biggest shift in my portfolio last month was Afranga, where I took advantage of the time-limited promotion to boost my returns. The platform offers a 16% yield on business loans from Stickcredit, a well-capitalized and established lender in Bulgaria. I saw this as a strong opportunity to lock in a 16% rate for up to 3 years, which not only increases my projected monthly earnings, but also reduces the constant struggle with cashback, since this capital will remain fully invested and working for me. Despite the 10% tax that Afranga deducts before paying out the interest, it's still a good deal in my opinion. Members on Buy Me a Coffee were informed about my move on Afranga and had the chance to top up their portfolios before the campaign ended. I've also increased my stake on Nectaro, where I invest in high-yielding loans from Romania. At the end of August, the portfolio increased to €114,434, representing an increase of 12.5% compared to July. This portfolio generated €739 in passive income last month, representing a 32% decline from the previous month. Most of my investments are on Peerberry and FinTown, followed by Afranga and Lande. When it comes to the loan status, 5.7% is not performing, while the rest continues to generate interest. The portfolio is diversified across various countries, with larger shares in Bulgaria, Lithuania and the Czech Republic. One of my goals this month was also to decrease the country risk based on the newly sourced data, which you can review on P2P Empire. There has also been a larger change in the loan types. Most of the loans in the portfolio are now commercial loans, followed by rental and real estate loans. Around 20% of the portfolio is secured with a mortgage or other form of collateral, whereas 80% are unsecured loans backed by the company's assets, as well as the group or buyback guarantee. My weighted average interest rate increased to 11.36%. The average investment per loan is €454 and the portfolio is spread across 252 loans in 16 countries. For more insights into the internal return rate for each platform, you can review our portfolio page on P2P Empire or access the semi-raw portfolio data on buymeacoffee.com, which is available to our members. That's it for this update. on how my portfolio is developing. If you're new to P2P lending, you can read our reviews, which include performance-related information. For P2P lending marketplaces like Mintos and Peaberry, you will now also be able to review key financial metrics as well as the latest financials directly in our reviews. If you found this video valuable, hit the like button and subscribe to not miss out on future updates. Thanks for watching, and I'll catch you in the next one.